All right, everyone, welcome back for another episode of Carnivore Trade. Today is June 16th, 2021. My name is Aaron Basil, and we're going to be going over the market reaction to the FOMC statement today. First of all, spiders opened basically flat, and you kind of just chopped around, and then we started to roll over a bit leading into the statement at 2 p.m. And I sent a few tweets out, and I said it was kind of odd that VXX is grinding lower pretty much all day long, and that volatility is getting really cheap going into the Fed statement, and that it's just odd that no one's putting any hedges on. And then sure enough, not long after that, VXX got a nice little bid, and then the statement, we had the knee-jerk reaction, VIX hitting the high of the day, spiking up here, and markets flushing all the way down to this lower trend line, which I'll show you in a minute. And then we had this little W bottom and kind of just squeezed a bit into the close. One of the things that you really wanted to pay attention to, so there's a lot to unpack here, but one of the things that you need to watch for is for financials. So when we saw the reaction from the market, financial stocks pushed higher. JP Morgan up, went positive, red to green day. Goldman Sachs pushing back to the positive line. You see IWM on my screen here. IWM pushed right back up. And what that's telling you is that if they're, so obviously the yield spiked as well, and financials reacted to that positively. So that's telling you that whatever sell-off this is not the market panicking. The market's not panicking. If yields were spiking and the market was panicking, financials would be selling off, energy would be selling off, everything would be selling off. So it's just those little indicators that you got to watch for. And that's why I tweeted out and said, hey, the market's going to hold up. This is nothing. As long as JP Morgan remains elevated, it's going to be fine. I did say, however, though, if you take out this pivot, we could be in some trouble. However, this upsloping trend line here is very pivotal. Actually, futures down quite a bit here, and we can actually see this upsloping trend line on my E-mini right here. This is the trend line that's going back to the March lows. I've showed this to you guys recently. As soon as this breaks, you essentially are kind of opening up the floodgates, so anything can happen there. So that it makes sense that would get a bounce there. You also have the 50 MA coinciding there with that as well. Futures down a little bit in the after hours. You can see it had a nice little flush after the market closed, but now well off the lows here, and kind of just getting a bounce and kind of hovering in this range. Gold today got hit as well. If we look at gold futures here, and it got hit again after hours also, just like the E-mini did, but nice bounce off of the lows. Honestly, this is nothing to really worry about. Again, no technical chart damage done. It is a bit of an ugly sell-off, but you're still holding the 100 moving average. You're basically into a 50% retrace. And I've been saying that gold needed to pull back a little bit and do some backing and filling, so nothing really wrong here. Doesn't mean it can't shop around for a while and maybe get stuck into a range for a little bit before moving higher, but ultimately, nothing too terrible here on the chart. I am looking to add to Agnico Eagle. The area that I would be looking for, it almost got to my level today. It would be just a pierce of this 50 MA. So anywhere around 68. There's also a nice level right here at 67. You see this pivot high, and then you retested that high again, consolidated for a few days, and there's your breakout level, back tested it. So that's going to be a good level as well. So anywhere in that $67, $68 range is a good entry to buy on a dip for Agnico. As far as what to really make of today's price action, we did see the dollar spike, and the dollar was up very precipitously. Look at this this move. I haven't seen the dollar make a move like that in a long time. That was a pretty big move for the dollar index. Home builders had a nice push through this support level, although there is some support here at the 100 moving average. Transports also, that's the industrials. Transports also cracking through this little inside bar pattern here, although it does have support at 15,000. It's probably going to need to do a little bit more consolidating if it's going to break through that. But so as far as overall, it's hard to really make too much of this. Remember, we have quad witching on Friday, so options expire Friday on all futures and everything, commodities, equities. So we have the quad witching, and this is typical institutional game playing to see the market fade into the Fed statement and then whip right back up. I said that on Monday I said on Monday I'd be surprised if we don't see some type of reversal on Wednesday. Based on this close, on the QQQs and the spider on Monday, we had an all-time high, but it was on absolutely putrid volume, and it was just kind of like almost a token all-time high. And if you know how the games are played during OPEX week, it was almost kind of obvious, really, that they were going to do something like this. That doesn't mean we go lower into the end of the week. As far as where we go from here, I really honestly cannot say. Seasonally, we should see a dip right now. The problem with that is usually seasonally after the last week in June, the first week of July is historically an absolutely monster bullish week, as is the month of July in general. However, if we do see some selling pressure and this trend line breaks, really anything can happen. So overall, really, just gonna have to watch the charts and let them tell us what to do here. Haven't made really any changes to my positions, so just kind of maneuvering there and still holding VXX. Still, I mean, if it gets pushed lower, I have no problem adding again. So, that's why you always want to make sure you leave cash, and you want to build your positions smartly and pyramid into them so that you can take advantage if there are times where the trade goes against you. But anyways, just wanted to wrap that up for you guys, and take care. We'll see some more volatility tomorrow on the charts.